S&P rejects at a pivotal level. Nasdaq reverses right at a control bar. What the McClellan Summation Index is telling us, semiconductor sector continues to hold above a critical level of 500, but for how long? Industrials to all-time highs, but then a pullback. 10-year Treasury is back over 4%. We'll explain what this means for bonds and how it will affect the equity markets. The long-forgotten VIX has its greatest week since March. Apple misses iPhone sales for the first time in years, triggering a massive sell-off. AMD's earnings and what it means for the entire sector. Smart money, dumb money confidence spread and what it is telling us. What Caterpillar, Cloudflare, and Elf all have in common. We have a ton to go over. Let's get to it. Hey everybody, welcome back. We have a ton to go over. Let's get into it. First and foremost, you can see how we're respecting the moving averaging and the curvature is still there, but this 46.24 is without a doubt becoming a nemesis. It's certainly something we're going to want to watch, and we can just see that clear rejection in here. You can see how you tried to get in there a little bit earlier, but we were just unable to. And I think that's an important distinction. Now, there are a couple things about the Nasdaq that we should talk about. Number one, you have a 12, a 22, and a 55 that are sitting on this chart. You should use whatever you're comfortable with. This is what I use. For our purposes, I'm just going to remove the 55 and I'm going to leave a 200 in just so you can see where the 200-day moving average is. We're going to get to that in a moment. So when we're up here, and this is how I use these lines so that you can understand where my head is and why these levels are my levels. So for me, if I'm over a 12, and the way that I look at the 12 is real simple. People use a shorter term level, and I will look at shorter term levels like a 5, things like that. But once you've broken that 12, usually on the swing trade side, you're busted. You can hit a 9, but get below the 9, get below a 5, and the swing trade might not be busted. By the time you're below the 12, and this is why I like to use these on daily charts only, you're pretty much busted on the swing trade side. And I'll get into this and a little deeper into this video, but what happens here when this happens, you'll note that you start putting swing trades on and they're just not working. And you can't figure out why. You're reevaluating your life. You're trying to figure out what's going on. And very simply, if you were below the 12 and you're putting on swing trades and they're not working, that's just why. It's just a very small sentiment change. I use the 22 as a demarcation line for who's in charge. So in other words, for me, the 22 is utilized, and I could do a whole video on these moving averages. There's way more to it than that. If that's of interest, just comment below and I will do a video on it. I do appreciate your comments and you sharing these. It helps me greatly in creating content and keeps me from not having to run ads, quite frankly. So please keep sharing if you find value and please comment below. It is greatly appreciated. It does help me create content. So what you have here is you have a 22. I would just tell everyone to look at the 22, relatively simple. And it'll just make your life really easy. If you're trading up on the 22 and you're above the 22, you should just think of it as the bulls are in charge. And if you're in a position where you start breaking below that 22, you should just start thinking, and you can see how we're doing it right here, you just start thinking that the bears are in charge. That's how you should utilize that line, okay? And quite frankly, this 200 that I left in here, that is your last line of defense, period. That's how it should be viewed. 55, some people use a 50, some people use a 55. I always tell people that they should use what they're comfortable with. You want to use an EMA, SMA, do what you want, but you see that level right there? That is where the institutions will develop either the last line of defense or where they'll show an interest. And you can see that right here, and you'll be very interested to see when we get to smart money, dumb money, how that actually correlates almost perfectly with that. But it's important for you to understand how I view these lines so that when my next statements come out, you can understand why I'm saying what I'm saying. So to start with, I'm going to focus on this 22. And it's going to be, again, Captain Obvious, and we can all see that what did we do here? We didn't break it. What did we do here? It's not even a question if you broke it. You actually confirmed that you broke it. And what do I mean by confirmed? So in other words, forget this because you're sitting on it. We all know how that goes. And then the next day it goes back over it. And then again, you're reevaluating your life. But when you crack here and you have that lower low, and then you make another lower low close, you have a confirmed move below the 22. You have 3 to 5 days for this move to get back over that 22, or the bears are in charge, period. So you have a confirmed move that the bears are in charge here, 3 to 5 days, and it's just, that's the new normal. I guess there's no other way to say it. So I would watch this very carefully. I am watching it very carefully. There are signs that are telling us that this is going to get not great, that it's not going to be ideal. And we're going to get into some of those signs right here. As always, my style is I trade what's actually happening. I don't go out there. I still think that the market could possibly hit new highs by the end of the year. That's my belief, but I'm going to trade what's actually happening because that's how I make money. That's how I make my money trading. I am a pattern trader and I'm looking for patterns. You can see down here on the RSI, again, I say this all the time, but people will say, oh, well, there's no value in indicators. That's on them. And it just clearly means that they don't really spend the time to get into these. I talked about the Ichimoku cloud. It took the guy 30 years to develop it, and people think they're going to learn it on a Tuesday. So you can see how you're declining here. You see how you're rising here. What is that? That is a negative divergence. We never know when they're going to come home to roost. We don't. We use this for Bitcoin. If you follow me on Twitter, or you've been following this channel, and we've been talking about this for some time. And when it was on Bitcoin, and they're glaring. They do come home to roost. It's just a question of when. And then you don't know how deep it's going to be. Usually it's as deep as the divergence is long. There's something to that. But the way that I would do it is just when you know it's there, it doesn't mean don't trade. It just means have a heightened sense of what's going on, especially when you crack there like you are right now. So what does all this mean? Well, number one, the very first thing we have to do is get above 4,500. Every morning around the 8:30, I try to get them started a little earlier, but what we do at 8:30 is we have a pre-market live show. It is free to the public before I start doing the private live stream for the community. But we went through this, and this is a cloud formation that I use, and I've been using this for years. And it really helps me just stay out of the way. And I'm just gonna spend a little time here just trying to help you guys out so that you can utilize it the same way I do when you see these in the pre-market. You see when this green turns gold here? That is a long-term indicator for an hourly chart, and it just means that we've gone from bullish to bearish. If I use those long-term indicators and I just utilize that one function of this thing, which actually is much more in depth than this, but let me just point this out so you can see why I point these things out to everybody. I'm going to take out the rest of this just so you can see what I'm talking about here. If I just acted and did nothing off of what I'm about to show you except trade off the long and short term of this, and let's go back to 23. We'll go back as far as we can so you can see this and understand. We'll go back to June of 23, and I'm just going to point these out so that you can see them. So here you flip from yellow to green. Now, if you just very simply went long there, you did okay. If I go here and just this little spot here and I close this because it went yellow, well, that's okay. But then if I go right here, then it goes green. And I think that's an important distinction. Look, not everything's going to work, but look how that kept you out of harm's way. Look how this told you when to get back in. And we're just using this in the greatest sense. I'm not telling you to go out there and buy calls, buy out of the money options, trade them for a day. I'm just telling you to get a guide of whether or not you should be long and short on an hourly. And you're going to get these readings that are not always going to work. Right? I mean, you do know that not everything works 100% of the time. I'm sure everybody realizes that. And you can see it right there as well. And if you're doing these flips and you're just doing it from the standpoint of, oh, I don't want to short, I only want to go long. If you use something like this, and I do go over this in the pre-market, you'll save yourself a big headache. So that said, when I see this, it makes me want to put the brakes on. Now, without getting into everything else, one of the key things that we did was we looked at this, and we actually did this in the public video as well, was we looked at this and said, hey guys, you have a head and shoulders here. You have a left shoulder right here, you have a left shoulder right there, you have the head right here, and you have the right there, okay? And then of course, here's your neckline. So now we all see that. And we just said, look, if you break this, we're going to have an issue. And we just gave the levels to watch. It wasn't this 50, everyone was saying 45.50. It's actually 45.60. And you could see what we got there and then what happened. And then actually what we did in the room was we watched that level. Now, this is important. It's why I'm spending time on this so people get this. When you get to that level, do I know what's going to happen? No, I have no idea. This becomes a level of interest. So then when that's a level of interest, what do you have to do with things that are interesting? You have to pay attention to things that are interesting. It's not that complicated. What do I mean by that? Well, I'm not going to look at this on an hourly chart. If you want to pay attention to something, you pay attention to it. So then you start dropping to a little bit of lower levels. And that's exactly what we did. Now, I'm dropping this in from the community just so you can see this is where we talked exactly about this. We're at that level, neckline and rejected S&P. So I didn't hit here and go, and I'm showing this for a reason. I didn't hit here and go, hey guys, by the way, we hit our level, so we're definitely going to break. What I'm waiting for is a clear sign of rejection. I got my sign of rejection, formed a flag, and then it became clear that this was a good spot to put on a short or to buy puts, whatever you wanted to do. And then you just kind of walk the level down. And that's what we did. We just talked about it and said, okay, we're dropping. And then we just watch the next levels. Then you watch the next place of interest. I'm spending time on this because it's important, and you'll see where this is going in a second. So you can see how you're coming straight across here, and then you broke that 45.10 level. I actually had this a little higher, candidly. I had us up here more at like 45.20, and you can just kind of see that it really didn't care where I had it. It did its own thing here. But once you broke that, you started forming these patterns like here. And you could see, and this is a pretty nasty pattern. When you're down this far, when you have a long bar and you're down this far and all you can muster is that, you're probably heading lower. If you can't get up half the bar, you're probably heading lower. If you ever look at these reversals like here and you make it over half, you're pretty decent shape. So here you are, you're coming across, you break down, then you break a key level, and where'd you close? 4,500. So now we know that we're below 4,500, and that's really very important for us to understand. Okay, so now we're at 4,500, what do we do next? And I want to point this out. You need to understand these patterns. Again, if you want to trade, you have to understand pattern recognition. Why? Pattern recognition doesn't work. It works if you understand how to read it. Why? Because this is human behavior. What you're seeing here is human behavior. And that human behavior is telling you very clearly, I'll get better with these arrows, I apologize. What that human behavior is telling you, hey, the sellers up here are still in control. So what that means for us, and I'll bring this down so you can see it, is the first one was 210. Okay, this is here, and you can see that level again. And what we talk about is you're setting up again. Here, 5-minute bear pattern, 3-bar for put buyers or short sellers, use that doji high of the day. Okay, what happens? It cracks here. So you have a spot up here that makes sense, and then you have a spot down here that makes sense. So the trade's still going on, but what you're waiting for is you're waiting for confirmation of that move. So it's not, and this is an important distinction, because it's not like you want to be here shorting. You want some pattern to short so that you can make the decision. Now, why is all that important? It's important so that you can make right decisions and you start thinking about the market objectively. I'm going to go here. Let's do it this way to be quicker. And I'm doing it with the S&P so you can see what's going on. You have patterns that are developing here. When you understand those patterns, you can make better decisions. It doesn't mean that you're going to call the crash. It doesn't mean that you're going to call whether or not we're going to highs, which personally I think we are. But I could very well be wrong. It's clear that we're gonna pull back. I mean, we've been talking about this for weeks, but it's very clear that there's a pullback out there. And you just go back to the other videos, you can see us talking about it. My concern now with what I'm seeing in the S&P before we get to the Nasdaq and why I went through all that is this: you have a support level here of 4,500. Okay, you're sitting on it and you closed at a low of the day. You're rolling here. This 12 is pointing down. This 22, we tried to get back over and got. So when we see this and we see the RSI starting to crack, and in this case, the RSI, me watching that 50 is a lagging indicator. The negative divergence is a leading indicator. This gives me pause. And this is something that we really have to pay attention to. There's some other things we have to pay attention to that we're saying, but we have a litany to go over. But that point that I made, you might want to watch that part of the video over again. I may actually clip it out and do it as a shorter term video. But I think about doing that sometime, clipping the longer one on Saturday, because Saturday's video, for those that are new to all this, they tie into all the videos that we do during the week. We just keep discussing the same things so that we stay informed with each other. And of course, I think that's a better way of learning. And that's really why I have this channel, so people can learn and see what I'm looking at. And then hopefully that helps them be successful. You can see that negative divergence in the Nasdaq. Now, if you take a look at this right here, it's pretty clear that we cracked. I mean, that's not rocket science. I'm not adding a tremendous amount of value there. Negative divergence cracking. 12's about to cross the 22. We got rid of the 22, which we now know is what? That is the level where the bears or the bulls are in charge. We know that the swing trade side of the Nasdaq is now broken. You can make the argument that, well, wasn't it broken here? Sure, you can make that argument. The issue with that is the line's still pointing up. Is that line still pointing up? No, it is pointing down. Okay, so now you're sitting in a situation where you just want to sit back, watch and wait if you're not big in shorts, and just kind of watch and let this confirm that we're going to go back up. Now you're through 80% of the S&P's earnings. The big one we have coming out is NVIDIA, and that's not coming out for a while. I think it's coming out not next week, the week after possibly. But so what's going to drive the Nasdaq higher? Well, I could tell you that what I'm watching on the Nasdaq are a couple key things. Number one, if we take a look at the Nasdaq, this looks beautiful still. I don't really see major issues. You haven't even broken down below this pivot bar. You haven't gotten to the 12-week. What we are seeing, in my opinion, are just some very clear signs of maybe too far too fast and maybe a pullback. And Finch didn't do us any favors with the 10-year, and we're getting there. But when we look at something like this, and you see how you are trying to get above that bar, and then we reject. So I use, in my head, and this is how I see the world, I use control bars to tell me where my head is. So that bar is in control. Why is that bar in control? Because this bar right here changed the entire Nasdaq. Well, how did that one bar change the Nasdaq? Okay, higher highs, and then you made a lower low. Once you made that lower low, what happened? Did you ever get above it? No. This bar is in control. It's a very simple way for me to view the world. And what that does is just tell me, well, if this bar is in control, I have to wait till that control is over. Because once that control is over, we know what that means. It means I can get involved. Okay, can I get involved? No, matumboed. So bonk, and then you break down. Okay, so we want to watch this. Now I'm going to give you another indicator that I use to just kind of look at the world a little bit, and it's very simple indicator, and we use this for margin debt if you've been watching these videos for some time. Now, the line below, I'm going to make this a little bigger, and we have a ton to go over that I think is really very important next week. So you're if you can't get what I'm putting down, I'm going to save you a lot of time now. You're going through a possibility of change in trend. That's why last week your trading on swing trades did not work. It's not you have to reevaluate your strategy. I put some trades on, they did not work. We're going to go over them because people seem to want to hear when I have trades that don't work. I have trades that don't work all the time. I had day trades that don't work all the time. It happens. It is what it is. The point is you want to cut those fasters and let your winners run. But we'll do more on that. Now, as you flip up right here and you start to roll and you start to break down, this is rate of change. This is exactly what it means. It's rate of change. I'm not going to get into all the nuances and understanding it. We should, and I would suggest that you dive into this, but I really want to dig into the summation so you guys get that. What is important about this is two things. Are you positive or negative, and are you going up while the market's going up? Or are you having some kind of divergence? This is a very long-term indicator, and that is what my concern is with it. The way that I utilize this is very long-term. In other words, I don't care if I have a divergence back here since February, but I need to be aware of that divergence. Why? Because we're going higher, but the rate of change is exactly what it means. Well, what does the rate of change actually mean? It means that the rate at which the Nasdaq is changing positively is increasing. Well, as the market was going up, is the rate of change positively increasing or decreasing? Well, it's dropping. Well, that just makes sense. Well, why does that make sense? Because mathematically, when you calculate it from here up, of course that's going to change over time. The rate of change is of course going to change. Okay, but what happens here? And it's just starting. But what happens when the rate of change accelerates, either up or down? Okay, well, that's interesting. I don't know. Well, what happens? Well, what happened when the rate of change accelerated here through the zero line? What happened? And I said this is a long-term indicator. What's happening here? We're running. Okay, what's happening when we start to crack here? Forget from here to here. I don't care about that. But when you start breaking the zero line, you need to pay attention. There's no spot in this chart, and listen to those words. There is no spot in this chart that you're going to look at where I have crossed this zero line and the market goes up. There's not one. There is not one where you are crossing this zero line and the market goes up. Okay, it does not happen. And that's not rocket science. This is a lagging indicator unless you're using it for divergences, how I'm trying to use it to go forward. But lagging is fine if it's a long-term indicator. What do you care? You don't have to be on Tuesday or Wednesday. It could lag, but it's telling you long-term what's happening. So I'm going to say it again. There is no spot on this chart where the Nasdaq goes up and the rate of change is below zero. Okay, could you be below zero and then be pointing up? You might get something out of that, but here you are down 9 and then you went to 0. Did you go anywhere? Okay, here you are, you're down at 10 and then you got to 0. Did you really go anywhere? Do you see where I'm going with this? It's very rare that you go from here to 0. You might bounce some. You should be getting some back, but the real move comes in what? Over 0. It's really not that hard to understand, but I don't think it is. But you need to pay attention to this. Now, I don't want to spend too much time going through all the indicators. The 12 is pointing straight down. The 22s are here. Your swing trades on the long side are probably not going to work as you are now, reevaluating your life. And you can see the 22 and how that's breaking down. The doji closing at the low. How we do not test this is beyond me. I don't see any way that you don't test 15,000. I say that and I have no idea whether or not it happens. Nobody has a clue. But the signs are there that we're going to keep going down. I don't see technically how you bounce from this. That's technicals. But again, as we know, there is a stool. And that stool is what? There is a macro part. There is a fundamental part, which is not doing us any favors right now. It was, but now we're seeing some weakness there that we have to pay attention to. And these are things that should concern us. The macro got out of whack because of Finch with the US debt. Fundamentals with Apple, Qualcomm, they're telling you there's weakness out there, and we're gonna have to talk a little bit about that. And then what you have right here is you have the technical side. Well, the technical side does not look great. Now, as I said, we have a lot to go over. Now, I asked for comments before about the length of the Saturday videos, and it doesn't really seem that anybody has a issue with them. I do want to go through a couple things. Number one, if you are trying to get into the community, there is a wait list. Just put your name on the wait list and then invitations go out as it opens. If you take a look at the newsletter's free, link in description, I'll also post it in the comments. You definitely want to get it for Saturdays because I put out 20 charts that I'm looking at. Okay, in front of you is the McClellan Summation Index. Now, what is important about this? So there's a couple things that are really important about this. First and foremost, the McClellan Summation Index is calculated off the McClellan oscillator. The index in and of itself, okay, and this is very important for people to get. Well, the oscillator, we'll start there. The McClellan oscillator is really important for people to get because this is the calculation to that oscillator. Let me drop this in here. So that's the calculation of the oscillator. And let me put it right there. I want you to just understand what you're looking at. So the oscillator is focused on the 19-day EMA of advances minus declines, minus the 39 EMA of advances versus decline. That's how the oscillator is calculated, and this is very important for people to get this, okay? Just so you know what you're looking at, okay? So you're looking at a 19-day EMA AD line minus a 39 EMA AD line, all right? Okay. I'm trying to get all this out as fast as possible, but it's a lot to go over. Now, what is the Summation Index? McClellan Summation Index is a long-term version of the McClellan oscillator, which is a market breadth indicator based on stocks, advances and declines. Sherman and Marion created and developed the McClellan Summation Index. It is a long-term version of the oscillator. Okay, so that's a very important line that you need to remember is about what we're going to go over. People will look at this and they will read this and they will say, oh, well, it has to get to a certain number. If you ever go to their website, and I'm not going to do it, but I should do a whole video on this because it's probably one of the most accurate things that I have. They will go out there and say, someone did a study on it and said, oh, it doesn't work. Well, they didn't, they tear the study apart, and rightfully so. And what they say is what I usually say about indicators. If you don't really understand it, you can find holes in it. You can find holes in anything. I mean, anything. And why? Because everything's flawed. So the bottom line is whether or not you get value from it, and I get value from this. Now, how do I get value from it? I don't get value based upon these numbers out of it. I could care less what these numbers are. I care about the depth of the drop. I care about the rise and what happens when they cross at that rise and then the magnitude of that move. So if I go back to here and I look at this, I can go back. Let's do it this way. I can go back years and see how we were up here for a period of time, how we were up here again, and how it marked when you're up here again, how that becomes a break. That's groovy, but that's not really what I'm trying to do. What I'm trying to do is now, how can I use this long-term lagging indicator to determine what direction the New York Stock Exchange, which I find this the most prudent to use on, is heading. And this is what I come up with. I come up with a line right here and a cross. And then I look at that line and cross and say, well, when we did that, we broke the zero line. Okay. Then we didn't really bounce again till that October, which just happens to fit perfectly with that CPI reading, which peaked the market, which takes me back to my three-legged stool analogy. Here's the macro move, and then there's a technical move right behind it. So you can see how you're crossing here, then you're crossing here. Okay, so we cross here. What happens when we cross here? Did we break the zero line? Yes. Okay, so then we broke the zero line. See how this gets red right here? They actually even do that for you on TradingView. I mean, my God. Look, see it? Okay. So you can see how you're sitting right here, and we're crossing again. Well, what does that mean? I have no idea what it means. I think it might mean that we have the possibility. Let's take a look at this indicator and let's think about it this way. Let's change the thought process, or change your thought pattern for a minute. Does that mean that we're definitely going to break here? No. Okay, let's think about it this way. Has the degree of probability changed that we're going to break the zero line if we cross here? Yes. Okay, we can all agree on that. The degree of probability of whether or not we're going to break this line has changed if we cross here. We have a higher degree of probability of doing it there because we did it there and we did it there. Okay, so now we understand that we can make that statement. So I would suggest that since we crossed here, we're probably at a greater chance of breaking that line. Well, what does that do? Well, that drops us to here. Okay, now, for anything statistically to work, you need 30 points of data. Any statistician will say you need 30 data points in order for it to be statistically significant. We don't have 30 data points. This is what we have. So we have to go what we have. So before the statisticians come into my comments and tell me that, I got it. 15% was this drop from that cross. 10% was that drop. So there's two schools of thought. One, we don't know how deep we're going to get, but we know that this level of deep here got us 10%. We know that this got us to what? Got us to 15%. Okay, so then we could say that if down here is going to get us to 8, this might get us a little further down and then here. So you could actually argue that you could kind of calculate out by every 400 points of drop that you're going to get a certain level. What's that level going to be? I don't know. We could say that if you got to this level right here at 400, then just count them out in fours, just to make the math simple, right? And we're just back enveloping. But you could say when you got to here, you're going to have a 5 drop. If you're going to get to here from that level, you're going to have a 10% drop. If you get to that level, you're going to have a 15% drop. How are we calculating that? We're using past performance as a guide. Doesn't mean that's going to happen. It's a guide. So I don't see anything here that is telling me that we are miraculously going to reverse and head higher. I see weakness, and the market's telling us that as well. Hope that was helpful. You might want to watch that again. So we dive into the SOX and we look at what's going on here. Let's get rid of this and let's just jump in and be Captain Obvious. This 500 needs to hold. And you can see how the 12 is doing what? How are your longs and semis doing? If you're trying to swing them, not too great. What's happening here with the 22? We're breaking. If we break the 22, who's in charge? Bears are in charge. See how this is all connected? When you start understanding what these things are, you can start putting all these pieces together. You start breaking out, and then you pull back, and then you sit right here, and then how's that go? So that creates a completely different scenario for us to understand. We have the negative divergence down here. We're sitting on that key level. Pop this in. You're talking to somebody that loves semiconductors and think they're going to make all-time highs by the end of the year. But I need to trade what's actually happening, not what I want to have happen. What I wanted to have happen was I wanted KLAC and Lam Research to break out so I could put on massive swing trades because I have a huge cup sitting there. And we have record earnings, and we have huge demand by Taiwan Semi and UMC for their products. But what I have is this, and this does not make me feel warm and fuzzy. So if I'm looking at this, and I'll show you something in a moment that you can use for Monday, but if I'm looking at this, I have to read this and go, well, that's not great. So then we use that information and we dive down. And now we say, okay, well, what does that mean? We're not breaking the 50, so that's good. So what does that really mean? So maybe we get to 496. What's really going to drive the SOX? Okay, it's the same thing that's going to drive SMH, which is 17%. SMH is 17% of NVIDIA. So we know that. Now, this is the other thing that should be troubling. We had a nice trade in this. We pulled like 30 points out. And we whacked it around a couple other times, but what is it doing that it's never done before? Here's your 22, 22, 22. And now what's it doing? And I think this is really important to understand when you start looking at this and going, well, we broke. Oh, well, we broke. Well, we turned green right here, so we're probably going to flip back over it. Well, we didn't flip back over it. We stayed below, hit the 12, bounced off of it, and got... So now we're in a situation where what we want to have happen is not happening. We all see this negative divergence that I keep pointing out, and we don't know when that's going to take place, but here it is, and that's a problem for us. It's certainly a problem for me. I love NVIDIA, and I think it's going to go higher. And I know that's not how you pronounce it, but we've thrown in the towel on that. So if we look at this and we look at the trajectory, what do we think could happen? I think we're going to test the 50. I do. I think you're going to come down here and test the 50. And I think you do that before numbers. And I think it's a concern. It doesn't mean that SMCI and these stocks are busted. I think that you're absolutely nuts if you're buying this, quite frankly, now into earnings. They better have some great earnings on Tuesday. To me, it's crazy because we're not seeing it. And I think that they could. I think they could have good earnings, and I think they could still go down. We're going to do that in a moment. But I want to show you a pattern that I'm recognizing that you can benefit from. But before we go down that rabbit hole, we're going to stay here. We're going to look at the stocks. And then what we're going to do is I want to show you this. And let me know if I'm covering too much education and I'm packing too much in a video. I did think about that when I was mapping this one out. To put these videos together, I do appreciate your input. Each one of these probably takes about 10 hours of prep before I even get it out. If you take a look right there, what's changed? Well, I got my first close above the what? Let's get rid of this drawings. I got my first close above the what? The 22. Okay, you got your first close above the 22-day moving average. Did you close here? Nope, 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 yep. Okay, so when AMD came out, I actually bought this and I shorted the stocks. It's kind of, I can't stress enough, guys, learn fundamental analysis and just enough to read a balance sheet when earnings come out, because the fact that AMD stayed up after that report was staggering. When did you flip? May. When was the last time you were above it? May. What are you doing here? I'm a pattern trader. I look for patterns. I look for patterns that are trading. What's happening right here? What do we see happening? Looks like a positive divergence, doesn't it? This is trading down. And RSI, what is RSI chart? The magnitude of the move. Are we going higher or lower? And what is the velocity of that move? This is telling you the velocity is about to kick up and we're sitting right to that 50 line. You're going to want to pay attention to this. I would watch this next week if I was you. I'd pay very close attention to this and see what it's doing. The tail does not wag the dog. The SOX is not going up and the Nasdaq going down. Just think of it that way. Industrials. This was disappointing. I thought this was going to be our leader and we cracked the 22. I want to go through this. And we're going to address some of this, but I might as well address it now. This was very disappointing. We got to the top of this channel. I had a nice trade in this. I made a little bit of money, but this upper channel, we actually had somebody, and this is why I love the room and the community, because it's not about ego, guys. And the people that have been in the room for a while know that, or they get it. It's about, here's the data, do what you want with it. And of course you give alerts and stuff like that. But the best thing is when I give, for me, like the coolest thing is teaching people stuff and then seeing what they do with it, even if they take the other side of the trade. It's just fascinating to me. But someone shorted it here, and they did exceptionally well. And they were very clear as to why they did it. The upper channels right here, the dojis right here, you're flipping the doji, you have an evening star. And I'm not looking at the forest through the trees. I'm not looking at it that way. I'm assuming this doji is going to hold and then push higher. That was my plan. Guess what didn't happen? That broke down and there was 10 points there on the downside. So understand your patterns, guys, and understand upper channels. There's a lot to it. But this worked, and it wasn't what I was expecting. My concern, and we'll get into this, is I'm seeing way too much of this. Way too much of breakouts, and they're one-hit wonders. And when you start seeing one-hit wonders, you need to put the brakes on. I can't stress that enough. When you start to see, remember the statement, when you start to see all these one-hit wonders, put the brakes on. And we might as well get into a little bit of that now while we're doing it. SYM is a great example of this. One-hit wonder, goes sideways, sideways. They break out. We want to talk about a trade that I did that did not work. Here it is. They break out and they break to the upside. Not only do I clear this one, I clear that wick and I push. And what happens? Rejection, I close 50% of the trade. Breaks, I close the rest. Absolute, like did not work, was not up. It was not up one day from when I was in it. Now I was up in the trade like a couple dollars when I did it, but I never took it because that's not what I was shooting for. Let me show you this. This is 3M, completely different sector. Okay, completely different sector. Has nothing to do with that sector. Tries to get to the 200, and what happens here? Solid earnings, great report, coming out of a huge, what I think is a nice little turn. Gets over, can't make the higher high, can't give me the 200 confirm. I assume, see these highs right here, 113, 113.14. So let's go through that again so that you see this right here. So you'll see this level right here, and then you'll see this right here, okay? And then watch these numbers that are here when I do this. You see how you click on that? This is 113.07 and then 113.14. What they did was they clicked me up. So I think I'm going to get my higher high. I act. And then what do? They go sideways to, keep my hopes and dreams alive before smashing them. And then they take out the low and then the trade's busted. When that starts happening to me, you need to put the brakes on. When you start seeing stocks like Amazon breaking out and then reversing, closing at the lows, you need to put the brakes on. When you start seeing things like this was glaring on Friday. I never see this. Well, I shouldn't say I never see this. It has been so rare to see this that I can't remember the last time I saw it. But I'll show you what I mean by this. So here we are, and let me put this pullback pattern in that I use, and I'm gonna get rid of the RSI, and I'm going to drop this down. This is a 9 EMA. I'm going to get rid of that. And now we're going to drill into this and go, okay, well, going straight across. Again, comment if I'm going through too much, but there's so much for people to understand. And why? Well, you can tell I love this stuff. But why? Because you're seeing a change. You're seeing a possible change in trend. And I don't know for how long. But this is fascinating. So like, these are the best trades in the world. Because I'd rather this be green, but it's not. But you consolidate and you don't break. You consolidate and you don't break. So what's happening down here? You're getting that VCP that Minervini uses, right? Volatility contraction, but you're getting on like a microcosm. And then you flip, boom, and it breaks. Look at that volume. Look at the volume of that break. I mean, that is just, it's staggering. I mean, like, go back and look. You don't have anything like that. And I get that it's earnings, but you have nothing like that. Then they give you the follow through, the higher high that everyone's looking for. And then all the people will come out and they'll use a 50 line. They'll use a 50% of this bar as their stop. And I would have done this trade. I put the brakes on when I saw something. But when you see this right here, you have to look at that and go, wow. Like, wow, look at the volume that's coming in there. We just ran over 15 minutes. We ran over the open. Like, there are so many reasons why you would buy this. And look what they did to them. When you see this, you need to put the brakes on. And it's not that you're seeing it in one trade. Okay, it's not that you're seeing it in one trade. And what's troubling to me more than anything is the names that were going up. And let's take a look at Tesla, which I always get asked about. What's troubling for me on names like Tesla are, I've been waiting for this to break. And if you've been listening to the video for the past couple of weeks, I've been laughing because every time it looks like it's going to break, it lures me in and then it just does not break. So what I started to realize that this was starting to do was that the change, you have this change. Okay, so what does that change mean? And this is when you start understanding these patterns, you can start doing it sooner. Okay, so what do I mean by that? Well, all of a sudden, buying dips was working. Buying dips is kind of working, but you know what's really working now? Is shorting the rallies. So shorting into these 22s and these 12s is working great. And so this finally cracked. You could see the bear flag right after earnings, going sideways, breaking down, and now look where you are. So what we did on Friday with this trade, and this was really simple. I'll do it off of one because that's what we did it off of, and I'll show it, and you can see it right here. All I did was let this trade up, and then you see this reversal right here? Because I know where those other bars are. You see that reversal right here? So this is where we start paying attention. Let me show it to you this on a 1 because it's absolutely glaring what happens. And it just gave the clear signal. So here's your reversal, 1, 2, 3 bar pattern, breaks, broke that 9, that was it. All this volume, all that push, and then we cracked. And so I'm looking at this chart going, well, that's a pretty easy spot to put this trade on, and that's a pretty easy spot for a stop. So the trade was pretty mapped out. And then from there, we're shorting into these rallies, and what puts on this did very well with it. And then I'm just watching how we respond to the previous day close. Breaks it, I'm like, well, there's no reason to do anything. Retest, fails, okay? And then you're scaling out down here. Retest, they get the higher high. They just flim-flam me. They gave me the higher high green. I got out of the rest of the trade. I did well with it. And then they bring it back down, and then you know how you closed. And they always give you another chance. And this was a pretty clear chance right here to get back in that short. You can just see that once you broke that low and how you acted at the end of the day. But we can do that in another video. Point that I'm getting at is that's what's working now. That's what's working with names like Tesla. So going out there and trying to buy that, as we went through this 2 weeks ago, you came right to this DTO and you reject it. Now, I want to be real clear here. I'm not calling for the end of the world or we're going to crash, or I don't know how this is going to play out, but there's some signs here of some stuff that we have to look at, and we're going to get into that. You see that right there and how you're breaking? So now if we drill into that 10-year and we study the 10-year, my problem is what Finch did, because it's always something that we don't know that's going to get us. Now, what do I mean by that? If we're all talking about regional banks and we're going to have this great regional bank crisis, we're not going to have a great regional bank crisis. If we're all talking about commercial real estate and that's going to be the biggest problem, and all these banks and all these buildings are going to go to zero because no one's ever going to enter them again, and all of a sudden Park Avenue office space is worth zero, it's probably not the problem. Could the problem be that the sovereign debt of the US gets downgraded and Finch is the first pin? Well, that couldn't possibly happen. Why can't that happen? Well, that can't happen because Yellen told us it couldn't, and they rolled Summers out to tell us it definitely can't happen either. Okay, so that's the thing that we have to focus on. The thing that they tell you is not a problem is the problem. That's how you have to think. What they tell you is not the problem and everything's fine, and don't look over here. Look over here. Okay, see the control bar? This becomes the problem right here. That's why you have to look at this and go, well, that might be the problem. I think that's the problem. I think the problem is the debt. I think the problem is that all these organizations are not aligned together. You have Powell raising rates at a level that Congress can't comprehend as they spend money, or maybe they don't care. I'm not going to go down that rabbit hole, but I think you have to look at this and go, if that's going to be the problem, and here's what you have to understand about this. If the 10-year does this and goes higher and pushes higher, equities are going to drop because people are going to buy bonds because they're more attractive, or people buying bonds. They certainly are buying the high yield bonds now, aren't they? The past 2 days, okay. How about the 20-year? Okay, did you think they shook enough people out there? Sure looks like that to me, looks exhausted. But where are we going? Maybe up 5% for that quick move. But when you start to see this and you start to see these changes, like you start seeing them in the dollar, you start to get uncertainty. Uncertainty breeds risk. Risk means get me out of equities, risk off. Risk off. When you hear that term, that means I'm selling equities and I'm looking for safe investments. I think we're going to rotate this way. This is where I think we're going. I think we're going back into this is value versus growth. And we're going to look at this on a weekly basis. And yeah, I chart everything, and that's a 9. And I would just simply pay attention to when I see things change. I think it's important to look at when things change. It doesn't mean that it's always going to work, but this is the last time that value versus growth on a weekly basis was above that 9. You might want to pay attention to that. You might want to go look at value names. Some of the value names out there could be anything. So for me, I'll give you a great example. I would start looking at some of the defensive names. One of the stocks that we bought at 31 or 32, SLG. Why? Well, it's trading at half its book value. They just sold 50% right here of 245 Park for $2 billion, which marks their book value at $77. Well, let's say I walked you guys through this several times, but let's say that book value, I'm off. And let's say it's off again by 20%, which is greater than the great financial crisis. Well, where does that put this stock? Well, that puts it at $60 book value. I'm at 36, okay? And they're still paying their dividend. That's why this one's very appealing to me. You start looking for the value names. Where else could there be value? Energy. This was one that we bought 16.20, and it went up 120 points the other day. I waited for confirmation. I liked this name earlier. I actually went over it in previous videos before we even put it in the room. And again, that's why you can see all these videos are linked. I didn't really want to buy. I came back, I broke the 55, tested it, and then went. I didn't want to get involved before earnings because this is a long-term play to me. This is a shift that I see going on in the market. Texas Pacific land, any place that's going to lease land for oil or drilling or any of these trusts that are out there, they all look very good to me. This was just a staggering report when people see it. All of a sudden, revenue is up 12%. Okay, they lease land. Think about that. Why would your revenue be up like that? Because they're leasing more land. It's not, again, there's certain parts of this you don't have to get too complicated with, but we're breaking out. I think you're heading back to highs. I'm looking out 3 months to a year. But we made 100 points with this on Friday. And it's a very simple trade. No one's paying attention to it. This is where we're heading, I think. I would start going through some of the value names that you see out there. And the reason, again, that I'm saying that is you're seeing what's going on with value growth. You're seeing what's happening with the dollar, okay? And now the VIX out of nowhere is saying hello again. Now let's clean all this off and drill into this. So what do I mean saying hello again? When was the last time the VIX did that? Okay, we haven't had a level like that since March. We've had an emphatic higher high. So all of a sudden, people are understanding that there's risk. Well, when you're saying risk off, there's a couple different ways to do risk off when I say that. You can sell your stocks or you can buy puts against your stocks. What goes up when you buy puts? The VIX goes up when you buy put. It's always so interesting because in the room, past week, guys were texting me in the room going, go over the VIX short term, go over this. I'm like, I'm not touching that with a 10-foot pole. It's not going anywhere. Now you look at it, 17 to 19 and a quarter. Look at the breakout. And there's 8,000 names out there, guys. I can't see everything. That's what's so great about when we do those chats in the morning. It helps me, identify names. I would be concerned about a couple things that I see going on out there. Number one, AMD. Okay, them coming out and lowering guidance here and then saying, but eventually we're going to sell this other product and that's going to be better. And that's why inventories aren't going up. That's a concern. You've had 2 days of rallying. Look, I could be wrong here. People could see this huge base. They could look at this gap fill. I have puts, by the way, and I'm not up in them. And I could be here looking at this and going, well, no, I'm forming a base after making it a high. You're wrong. And I would throw this up and go, well, jury's still out, isn't it? You did get back above the 12, the 22, and you're trying to get back above the 55, and the RSI is pushing higher. So I could be wrong. I don't think I am, but I could be wrong. But when I get above that control bar, I'll know that my trade's busted in my head, and then I'll make adjustments. So we have that part of the aspect. But this was not good at all. And we had a great short on this, and I'm very surprised that it stayed up after hours. There is so much edge if you learn fundamental analysis, just the basics on how to read a research report and what to look for. There's so much edge out there now. We've got this, I'm in my late 40s, so there's so much of this culture that's just like, oh, just look at these readings and that's all you need. No, there's 3 legs. I'm going to do it again. There's 3 legs to the stool, and you have to realize that. And it makes all the difference in the world when you understand that sometimes you're going to lean on one leg and sometimes you're going to lean on another. No different than a bar stool. Okay? And now that fundamental analysis, that set the tone. And that's a concern of mine. Now, the other concern of mine that I had is this. This was a big concern of mine. Now look at this. Okay, you're below the 55. When was the last time you were below the 55? I have a 45-degree angle and everybody got out. I have puts on this. I'm net short Apple here. This is a no-brainer to me. I mean, if I get above here, okay, my trade's busted, but this has become a long-term short. You have to look at this and become really concerned when you see this. Like, you can't look at this and think that you're good. You can't. I mean, these reversal bars, after making higher highs, like these put in tops. It doesn't mean, again, that you're going to 150 or you don't know where this is going to end, but this is pretty nasty stuff. And I would pay attention to this. See the negative divergence? Okay, so this is really nasty stuff, and I would pay attention to that. When I see this, when I see the rate of change on the Nasdaq going below 0, when I see the McClellan summation collapsing, and you put all those pieces together, they all start stacking on top of one another. There are things that I have to watch. Value starting to pick up. Where's the puck going? I don't care where the puck was, Gretzky. So then you go there and you take a look at all that. Okay, so now we have a summation of everything that's going on out there. We're seeing how SYM can't hold its gains. We're seeing it with Net, how they're playing the flim flam. Cat can't hold its gains. Amazon, which crushed, closed at the low. You're not holding. As much as I want it to hold and I want it to go higher, it looks to me like we're going lower before we go higher. That's how it looks to me. Now, if we look at smart money, dumb money, and we don't call it that, we call this institutions and we call this retail. And the reason we do that is because sometimes dumb money or retail is better than smart money, institutions. So they can stop with the mind games, and we can just know that this is institutions and this is retail. And what we're looking for are patterns. And I will say this, how people read certain data is not how I always read that data. I look at what the data represents, and then I look as to whether or not it makes sense. Now, the one thing that should strike you about this chart is the degree in which the dumb money moves or retail moves is much more vicious than how the smart money or institutions move. Institutions move, and you can see these lines, and they're they're a little more grade to them. Where when retail makes a decision, let's do it that way. So when retail makes a decision, they'd make a decision, and we can see that from up here, down here. Okay, so you can see that how fast that decision's made. Even when they move super fast here on the dumb money, or rather the smart money, they're not moving as fast. Okay, what we have here is we have this line. Now this line is when you are at a critical level where you are feeling very optimistic. If you are here, you're feeling very optimistic. Okay, you are, green is go, red is stop. Okay, and that's how it's viewed. I view it differently, and I'll walk through it. But here's where this gets interesting, and here's how I view this. If retail breaks here on that downside, and what I'll do is go back a year and go, well, we broke here, how'd that go? Well, not very well. We went down, we went lower. Okay, well, maybe that's something I should pay attention to. Well, we broke here in 22. How'd that go? Well, that didn't go very well either. Okay, well, maybe I should pay attention to that. Okay, so meanwhile, when institutions sell, what do? They sell slowly to a fast retail. So when institutions sell, they sell slowly to a fast retail. Now, the exact opposite happens. When retail sells, they sell fast to a slow institution. Get it? Retail sells fast, they panic. Institutions, just the turtle. We're the hare. So this cracking here is something we need to pay attention to. This starting to make a higher high is something we have to pay attention to, because bottoms are formed when institutions are filled and then they sell into retail. Okay, so when we start to see this, we need to pay attention to it, because retail selling is going to lead to the S&P dropping. This is something that we really need to pay attention to. That's it.